All right. Welcome back to another episode of the Black Bullion Show. I have to give it up to Jim Cramer. Yep, have to. Because as much as I raise an eyebrow to his show sometimes here and there, I think he called it like it is. What is the it I'm referring to, you ask? Well, find out shortly. But first, if you're new to this channel, please hit that big red subscribe button right down below. Also, please hit the like button. It helps to get this economic evangelism right on out there to the masses, bringing more people into precious metals. So, one of the greatest wealth transfers in history. Stocks have rebounded because the pandemic is sparing big companies, Jim Cramer says. An important point that Cramer brings up is that this is the first recession that hasn't negatively impacted big businesses. And more specifically, it has benefited the businesses that are currently driving the indexes. So, who are these big companies exactly? Well, you definitely know who they are. FANG companies, especially Amazon and Netflix. But take a look at this chart here. It shows data on performance between FANG companies versus the S&P 500 versus the Russell 2000, which, if you guys don't know much about the Russell 2000, people tend to look at it as a barometer for the health of American companies. So check out this performance. This graph is called FANG You Very Much. Tech stocks as a group have outperformed the broader market this year. And as you can see, in the very beginning of this year, they were very somewhat kind of tied together. Obviously, FANG stocks were a little bit above everybody else. But as time went on, just even in January, they started to outpace. And you guys might remember that was towards the end of January and in February, we start to see things going over to the top in the Dow and the equities. And so as you keep moving on and on and on, you're starting to see some downward momentum, but still the FANG companies are above everybody else. And take a look, S&P 500 and the Russell 2000 are pretty tightly, pretty close to one another, and the FANG companies, they're starting to contract around that mid-March area. Everybody's contracting around that mid-March area. But take a look at this rebound here. Now we're starting to see some divergence. So as you can see here, FANG companies, they haven't really suffered too greatly during this time. I mean, if you take a look at the lowest point that they were at, they're at negative 17.4% in this graph. And they started at 0%. Whereas S&P 500, Russell 2000 started at 0, and the lowest point they got to was negative 30%, negative 30.7%, negative 39.9%. So, way lower. And it just goes to show, that, the FANG companies are pretty much eating up this time. Now, before equity investors pop their champagne bottles, I would urge them to be a little bit more cognizant of data that could catch the Dow off guard. If we begin to see certain data blowing up again, we may have a problem. And you may be asking, well, what could that data possibly be that could possibly blow up? This. Mortgage-backed securities held by U.S. commercial banks surpasses $2 trillion. Cause for concern? Now, mind you, this article that I'm reading is from Forbes, and it was written on December 9th, 2019. So this was at the height and when everything was very positive within the market. So I'm going to scroll all the way down to the conclusion of this article and read the conclusion. And it reads, mortgage-backed securities in the United States have marginally increased after the crisis. Bullet point 1. Total mortgage-backed securities issued in the United States have gone up since the financial crisis due to nominal growth in the housing market. Bullet point number 2. However, stricter regulations and keen oversight by the government has kept the growth of mortgage-backed securities in check, with the market growing by less than 5% in the last decade. Bullet point number 3. With the housing market remaining robust in the United States, we expect mortgage-backed securities to steadily increase in the coming years. Now, obviously, this was written in December 9th, 2019. There's no way they could have expected what we are currently living through right now, which is the housing market is poised for, for some hard times. And many felt that, when mortgage-backed securities were written, or when this article was written in December, there's no way they could have anticipated what we're living through right now. Now, check this out. Now, this comes from Vanity Fair. Now, I know it comes from Vanity Fair. Don't crucify me here. But take a look at this headline. Houston, we may have a problem. The headline reads, higher than we ever saw in the 2008 crisis. Why the coming issue, mortgage crisis, may be worse than the last one. So check out this quote. I'm going to scroll all the way down and read this to you guys. It's a little bit long, but it's very important. And it reads, he thinks, he's talking about an analyst, it could be actually worse than 2008. We're going to see vastly higher spikes of unemployment and vast alterations in human behavior going forward, he says. There is reason to believe that 30% of the restaurants in New York might not reopen. We didn't have that issue 11 years ago. What he described as a liquidity-driven problem in 2008 is now a solvency-driven problem. There are about $4.6 trillion in commercial mortgages in the United States, half of which are housed on the balance sheet of big banks, he said. About 10% of commercial mortgages are packaged up into securities, while the rest are on the balance sheets of insurance companies and non-bank financial institutions. According to the Wall Street Banker, in the last 2 weeks of March, in anticipation of not receiving a rent check on April 1st, about 2,600 commercial mortgage-backed security borrowers contacted banks looking for relief or forbearance of nearly $500 billion, or 12% of the $4.6 trillion. Half were hotels, 30% were retailers. That was just in March, he says. This thing is not staying at 12% default, which was higher than we ever saw in the 2008 crisis on commercial mortgage-backed securities. This is going to spike. Some of the big Wall Street banks are in worse shape than others. Wells Fargo has around $125 billion of real estate mortgages on its balance sheet. Bank of America has $85 billion. JP Morgan Chase has $65 billion of these mortgages on its balance sheet. He's worried, and that's making me nervous. He foresees a giant domino effect down the obligation chain. People stop paying rent, people stop paying utility bills, people stop paying property taxes. Huge pressure gets put on municipalities that already feel the economic strain of fighting the health crisis. Landlords then stop paying their mortgage interest and principal. The lenders, banks, and probably non-banks, which are more leveraged and thus more precarious, start seeing delinquencies and defaults on their assets, he continues. It's different from a liquidity thing. That's a credit impairment. It just ripples through the entire financial economy, even though it's starting in the real economy, which is what's so scary. Then it becomes a vicious cycle because the more the financial economy gets impaired, the more asset values fall. So the key here is that this mortgage contagion will likely begin within the real economy. You know, that economy that provides the majority of American jobs. You know, that economy that, doesn't influence the growth of the Dow yet. But when unemployment benefits run out in July, when PPP obligations to keep employees on until September 30th run out, I can guarantee you that we will start to see worsening mortgage crises in this country, in the United States. It will then spread to big businesses within the financial sector, and all hell will begin to break loose. But on that, pretty sad note, what do you guys think? Let me know in the comment section below about, do you think that the real economy right now isn't influencing the Dow, but could this ripple effect then impact the Dow and all those big businesses who are benefiting from this time? Let me know in the comment section below. Thanks again for watching. Really appreciate your views. Please hit that subscribe button. Please hit the like button. Have a good one. It's Black Bullion.